afternoon, everybody, and welcome to our webinar today. I think we're going to start. We won't wait for any more attendees. I'm sure they will join us as and when it starts. My name is Laura Hodgkiss. I'm the event and training team leader here at the Chamber. We're going to be running this webinar today on financial help for businesses and the self-employed during the COVID-19 outbreak. What I would just notice for those of you that haven't used Zoom before, there is a chance to ask a question at the bottom. So there is a Q&A platform that we will be using after this. Just so you know as well, we can't see or hear you, so we can only communicate with you via the chat function or the Q&A at the bottom of your screen. So with that all in mind, I'm now going to introduce you to Chris Beeston, who's going to do the webinar for us today.
Thank you, Laura. Let me just get our presentation up and running. There we go. So hopefully everyone can now see the presentation. Good afternoon. Thanks for joining us. An awful lot's changed in a month. We went from, this was something that was on the news, but certainly, excuse me, I wasn't taking it, overly serious, to our daily lives have been enormously affected in every way possible, and the scale of it really is now beginning to hit home. What I want to talk to you today is the financial help that's available. The government have been really quite proactive in changing lots of different things. They've introduced new reliefs. They've introduced whole new schemes, schemes that we've never even heard of before and of a type that we've never heard of before. And they've also changed around some of the more regular things just to try and provide a little bit of support for all the businesses and individuals out there who were affected. I'll run through it. What I would say is the way this has been done by the government is the Chancellor said something, some guidance has been put out on that evening, and that's what we know. That's not usual. Normally in tax, we have a consultation. People like myself write in and point out all the flaws in it and all the bits that it doesn't cover. Then the government rewrites it all. Then we have another consultation sometimes, and then the legislation gets introduced, hopefully covering most scenarios and without any major gaps in it. None of what I'm about to talk to you about today has been done like that. It's all been done very, very quickly. There's been no consultations. There was very little discussion with our profession, which is just the nature of it. Help was needed and help was needed now. So there is gaps. We haven't got all the answers. We can try and explain to you what we know now, and I can try and point out some of the gaps and the uncertainties, but there is undoubtedly lots of areas that we're not sure about yet. I know, we at Geens have been fielding literally hundreds of queries on how does this impact my circumstance? What about my particular circumstances? And quite a lot of those answers are we're really not sure yet. We can use a little bit of common sense, but some of it we're just not sure about. And I just wanted to clarify that at the start. If we move through, what I'm planning on looking at you with this afternoon is the support available to self-employed individuals. I'll spend quite a lot of time on that. That's a new scheme. It's a whole new way of doing things. And that's direct government support to self-employed individuals. That's not built on anything that was there previously. That's a whole new idea that's been put forward. I'll have a look at VAT payment deferrals, the deferral of the July 2020 payment on account, support for businesses that are paying business rates, obtaining time to pay on other taxes, the business interruption loan scheme, and then hopefully we'll be able to do some questions at the end, as many as we can do in the time that we've got. So what I'll plan on doing is I won't spend ages going through the presentation. I'll try and leave as much time for questions as I can, but I'll try and go through the salient points, some of the bits that were in the detail, some of the bits where it's just words that are in the guidance that worry us as advisors, sort of knowing how the revenue work and how they operate and what they end up doing in the end. If we start with the support available to self-employed individuals, this got an awful lot of press. This was very, very wanted. There was numerous trade bodies saying this was needed, it was needed. The government sort of held back for a few days, which is a long time in the current situation, and said, yeah, we know it's needed, but we don't know how to do it. We're thinking about how to do it. This is what they've come up with. It's quite broad. but I want to go through the major points, and then there's lots of little nuances in it that we just need to be aware of. This support is available to self-employed individuals or partners in a partnership who generate 50% of their total income from trading. That's 50% of their profits from trading. The profits for 2018-19 are the year that the revenue we're looking at in the first instance. So if your self-employed profits for 2018-19 were less than £50,000, then you can qualify, as long as your total income is not more than double that. So you can have a little bit of dividend income on top, or a little bit of other income, but the self-employment has got to be the majority of your income that you generate. If it is that your 2018-19 profits were particularly good, you can go back and there's a secondary test where you can see, okay, so 2018-19, the profits were 60,000. But actually, in 2017-18 and 2016-17, I didn't make anywhere near that sort of money. It was maybe 25,000. You can take an average and you would still qualify. One of the other criteria is that you must have submitted your tax return for 2018-19. I think this caught people out a little bit. Most people who are in self-employment and have been for a long time will have already submitted their tax return. It was due by the 31st of January and compliance rates are very high. People who haven't submitted their tax return, the government has given an extension up till the 23rd of April this year, so just a few more weeks, to file that tax return, and you would still qualify for this scheme. The obvious omission on people who haven't submitted a tax return for 2018-19 are self-employed individuals who weren't trading in 2018-19. So if your self-employment started in May 2019, you do not qualify for this scheme. Now that seems very harsh to me. The Chancellor was asked on the night of the announcement if that interpretation was correct, and he said it was. He said it was effectively too hard to police. There was too much of a fraud risk, so they only wanted to deal with the individuals who they knew about. Incredibly harsh, but that's their current position. I haven't heard anything to say that position will be changing, although people do seem to appreciate there is an inherent unfairness in that. If you do qualify, you'll receive 80% of your average monthly profits from the government up to a maximum level of £2,500. The scheme's initially going in for 3 months. There's no system in place. So there's nothing to do at the minute. There's no claim to make. There's no email to make. There's no form to fill in. It doesn't exist. The scheme isn't there. The Revenue said the scheme should be in June sometime, and the grant will be paid in one lump sum, covering those 3 months, being April, May, and June, in one go. What the Revenue said was they knew about these people because they submitted tax returns, so they would identify all affected individuals and notify them directly. I'm always slightly cautious when the Revenue say they know all the information. I think if you are self-employed, that you should be checking your own eligibility to this scheme. And let's make sure that you get a letter. And if by late June you haven't had a letter, I would certainly recommend to be on the telephone inquiring as to why you've not had a letter. I know from our point of view, we're going through our whole database of self-employed people. We're going to check eligibility across the board so that we've got a list of these are all the people who we think are eligible, and make sure that all of those people get a letter from the Revenue with this grant being payable. It's not unusual that the Revenue systems go wrong. They have multiple individuals on. They have discrepancies in different tax years. This is all fairly regular. Us accountants sort of smooth that out as the months go on every year. But when something like this is being done on a snapshot of a database, it's quite scary. So I would definitely implore you all to check your own circumstances to make sure that you are going to get it. And if you don't get it by late June, then there's going to have to be some sort of system when you can try and chase this up. There's a few other bits I did want to just talk to you about. They're sort of the headline points that the Chancellor put out. Some of the bits that were asked of him and have subsequently been sort of interpreted from what was put out in the guidance is that there is no immediate support in cash flow terms. This grant is coming in June. So for April, May, and the majority of June until this arrives, which will no doubt be late June, the Chancellor said that you needed to go and talk to your own banks and, you know, maybe obtain some sort of short-term finance, or there was the business interruption loan scheme, which I'll come on to later, to supply the cash flow needed for these 3 months. Slightly flawed plan, but I appreciate that it's an entirely new scheme. We've never done anything like this before, so obviously it takes time, but that is the current situation. There is no way of obtaining immediate funding under this scheme. It will come in June. Other bits that were in the guidance that the Chancellor didn't say, there's a very worrying line in the guidance in a lot of cases, I think, in that it says that you must have lost profits directly as a result of the COVID-19 outbreak. Now, that keeps cropping up in the guidance, but none of, the Chancellor nor the Business Secretary ever says it. It just concerns the professionals that when the actual rules and regulations are put out, there's going to be some onus on the taxpayer to prove that they lost income as a result of COVID-19. Now, for a lot of industries, that'll be quite easy to do. For a lot of self-employed people and a lot of partners, that'll be very easy to demonstrate. Either, as in our case, the office is shut, so I'm here working from home, and that has obviously a knock-on impact. Or, if you're in a trade where you've just had to shut down, such as a pub, that's nice and easy to prove. It's more difficult if, say, you're a shop and you've got some trade continuing because you're on the list that can remain open. Say you're a garage, cars can still be repaired. There's an onus on you, I think, inherently in there to try and prove that you've lost income. Now, that's not official. It's just in the guidance that you must have lost profits, but I'd be aware of it at this point. It's just the little bits where, the advisors are trying to read between the lines, given that we know how the revenue sort of operates. One of the other rules that is in the guidance but hasn't been very well publicised is that you must be trading now. So you must have been trading in 2019-20. You can have stopped trade because of COVID-19, but it can only be COVID-19 that's caused you to cease trading. And you must be intending and expecting to trade once again in tax year 2020-21. So come the end of June, July, whenever normality resumes, you must be intending and expecting to return to a trading position. So this isn't there for people who are closing down the business, taking early retirement and that sort of thing. This scheme does not look like it applies to them. That's what the guidance is saying. We need to be very careful on that. If people are falling into those categories, that rash decisions aren't made, it would then jeopardize such a grant claim. They are using the word grant. It is a grant. It's not a loan. It is a taxable grant. That was very clear by the Chancellor. This is taxable income. I assume it will be taxed as non-savings income, so in the same way as your self-employment income or your partnership income would be. Again, we've not heard that, but I think it would be highly irregular to tax it as anything else. But it will form part of your taxable earnings, so it will impact child benefit, pensions, all those sort of things. They'll still be impacted by it, you would think. What we don't know on this is what the interaction between this scheme is and the people who are employed scheme. So there is a scheme for employed people, which is all about furloughing, which I think you will have heard about. I'm not going to cover that today. It's full of employment law issues and contractual issues. I know the Chamber are actively seeking to do a webinar solely on that topic so that we can try and run through all the problems and the difficulties that are in that one. There's been no guidance provided about people who've got employment and self-employment. The revenue seems to be currently assuming that that's, they're distinct and people are either self-employed or employed. In practice, it's not the case. It's quite regular for people to have a part-time job and a self-employment on the side. It's even, in certain industries, so IT type industries, it's quite regular for people to have a full-time job and self-employment on the side as well. So we don't quite know how that's going to work yet. That hasn't been made clear at all. Gut instinct, it would be unusual if you could qualify for both, but that's just me speculating. I wouldn't think that was the intention of the scheme at all, but it's not out there yet. Again, that's one of these things that would normally get caught by consultation. And we haven't had a consultation this time, so we just don't know. We haven't covered it. One thing that we do know for certain is that this scheme does not cover directors of limited companies. If you operate via a limited company as a sole director or even as one of many directors, this scheme does not cover you. It is only for self-employed individuals and partners in a partnership. Limited companies do not qualify. They do qualify for the employment scheme in part, but it doesn't work perfectly. Again, hopefully when we get the specific webinar, we can go through all the problems that are on that as well. That's the support available for self-employed in the main. It's a good scheme, to be fair. You know, it's never been done. I think there was other countries in Europe that were doing it. The number's high. There's a few unknowns in that if you're averaging 3 years profits, what if you've got a loss in 1 year? Again, we don't know exactly yet. There's an averaging scheme already in force in tax that applies to farmers and artists, strangely, and musicians. That averaging just assumes that a loss is a zero. So when you average a loss year, you would call it a zero. That seems to work fairly well in the other taxes aspect. So I would assume that would what be done here. But again, we don't know. So if you've made huge profits in 2 years and a loss in the other, it doesn't necessarily help you when you're averaging. It's an unusual mechanism normally. But again, we'll have to see what gets done in the overall guidance when it comes out fully. All of the guidance that we've got on this so far is only what was put out about an hour after the Chancellor stopped speaking, and it's not been updated since then at all. So we are working on very much bare bones guidance at the minute. If I move on from self-employed individuals, there's additional support to anyone who's VAT registered. Now this applies across the board. So this is sole traders, partnerships, limited companies, anyone at all who's VAT registered. There's a VAT deferral being brought in. It applies automatically. You don't need to notify the revenue. You don't need to make any election at all. What this deferral does is your payment that is due between the 20th of March, which was when it was announced, and the 30th of June, you don't have to pay. It's only the payment. Most people's payments in that period will be by direct debit on the 10th of April, the 10th of May, or the 10th of June. Those payments don't need to be made. The revenue have, however, said that if you pay by direct debit, which the vast majority of people do, you need to cancel the direct debit. If you don't cancel the direct debit, they seem to be intimating that the direct debit will still be collected. So, we're advising all of our clients who want to take advantage of this to cancel your direct debit nice and quickly. You've still got time on the 10th of April. Most banks can cancel a direct debit within a day or two, but you do need to get on with it. You've only got another week or so before that direct debit will trigger and will be gone. The VAT that you're deferring, and it is only a deferral, this VAT still needs to be paid. It will still be a liability on your balance sheet. This VAT that's deferred needs to be paid by the 31st of March 2021. So they're giving us quite a while, almost a year in certain circumstances, to pay this VAT, but it is only a deferral. It's not the liability disappeared, it's just VAT deferred. What they have made very clear is that the VAT returns still need to be submitted. So all VAT returns, when they're falling due, they're normally due on the 7th of each month. So the 7th of April, the 7th of May, or the 7th of June still need to be submitted. In practice, that's causing quite a lot of difficulties. I know I've been speaking to clients who, their finance team isn't there or their finance team's at home. It's very difficult to get your accounting records up to date to the point where you can submit a VAT return confidently. The guidance we've been hearing from our institute, the Chartered Accountants Institute, is that the VAT return still needs to be done, but the revenue are going to take a pragmatic approach. So the revenue normally say that, oh, a VAT return needs to be correct and care needs to be taken, and there should be a lot of checks and balances done on a VAT return before it's submitted. I think that guidance should be relaxed ever so slightly so a pragmatic view is taken, but the VAT return still needs to go in. I suppose everyone's working on a good faith sort of arrangement at the moment, that I've sent my VAT return in today in good faith that that's as correct as I can make it today based on all the information I've got. Because everyone's in so much chaos, there'll be invoices being slow, there'll be invoices missing all over the place. So we just need to be mindful of that, but the VAT return needs to be submitted. I would think surcharges would still be applied when a VAT return isn't submitted. So please, please, please do submit your VAT return as normal. I know I'm doing a lot of work with people to try and assist getting VAT returns submitted on time and in some sort of good order, even in the chaos. A couple of the oddities to it: if you're in the VAT MOS scheme, which is the mini one-stop shop scheme, that's for people who trade across the EU, that is not covered by this VAT deferral. They work on quarterly and people's payments are due very shortly in a couple of weeks. Those payments are not deferred and they need to be made as normal. Again, those VAT MOS returns have got to be made as normal as well. That doesn't change. The only other one that people have been worrying about that has been clarified by the HMRC is that if you're in a VAT refund position, which lots of farmers are and charities are, the VAT refunds will continue as normal. I would hope, although I have got VAT refunds, on a practical point of view, VAT refunds sometimes get checked by the revenue, and those checks are taking an awful lot longer than normal. I think they're struggling with staff. So my refunds are being delayed, but the guidance that's going out there is that VAT refunds will be made as normal. So that's hopefully some comfort for people who are in a VAT refund position. Just because payments are being deferred, VAT refunds are still being made. In my opinion, that's quite a good scheme. It aids cash flow immediately. It doesn't remove any liability. It's purely a cash flow measure, but it has a nice, good instant impact on cash flow. Quite a good measure. The 31st of March 2021 would seem fair at the minute. That still seems quite a long way away. So hopefully that'll have a really good impact. I know all the clients I've been speaking to are quite positive about that one. That'll have a tangible impact on them. Moving on to the next deferral. Again, this is tax deferral. The tax liability is still there. It's purely a deferral. People who are in self-assessment, for whatever reason, this was clarified. When the first guidance came out, it sounded, when the Chancellor said it certainly, that this only applied to self-employed individuals. So again, people who were trading. It's since been clarified that all self-assessment taxpayers across the board won't have to make their July 2020 payment on account if they don't want to. Again, it's optional tax deferral. So if your income is solely from dividends from a limited company, you would be covered by this, and your July 2020 payment on account could be deferred if you want. Again, you need to cancel the direct debit, although the direct debit system on self-assessment works in a slightly different way in any case to VAT, but I would still recommend cancelling it in full to make sure that you can take advantage. If it is that you pay by cheque or by bank transfer, then you just don't need to do it. The Revenue have confirmed that there's no interest going to be applied to this. So this is going to be interest free and obviously penalty free because it's for them. The full tax liability for the tax year 2019-20 will still need to be paid by the 31st of January 2021. So the tax deferral isn't as long as the VAT deferral because they haven't moved the self-assessment balancing payment date at all yet. That remains the 31st of January. It sounds okay at the moment. If matters continue for a month, 2, 3, 4 months down the line, that sounds ambitious to me. But as we are at the minute, the 31st of January does sound a little way away, but so that has stayed the same. The relief is optional. You can still pay your payment on account if you want to. I have spoken to a few clients who are planning on paying their payment on account. In any case, as they think, that's the public duty thing to do. So there is people out there who will continue to do it. So the revenue have made it optional, and there is the facility to pay if you want to. Your payment won't be returned. Again, helpful, as July will be upon us all too soon, and it just aids cash flow for all people involved. So a helpful scheme, very good really. We'll see what happens to the 31st of January. I haven't heard anything on that yet, but again, it is a little way away. The next one to look at, this is support. This is direct support. So we were just doing the VAT and the self-assessment payments on account are deferrals. This isn't a deferral or a loan. This is another grant. People who are paying business rates, there's varying different levels of this. So I'll go through this quite slowly. It's a little bit confusing. You just have to work out which category you are in. The first one is a grant of £10,000 to all businesses who receive small business rate relief or rural rate relief. Rural rate relief doesn't apply to very many people at all. That's people who've got post offices in villages of less than 3,000 people and places like that. That isn't a very popular one. Small business rate relief is quite widespread. That applies to people who've got a rateable value on their property of less than 15,000 to some degree. There's a sliding scale on small business rate relief, but under 15,000 you do qualify to some degree. Those businesses will receive £10,000 as a grant direct from the local authority. The local authority have got the money. The business secretary confirmed that on Saturday's announcement. So this process is up and running and it is starting. The £10,000 can be extended up to £25,000 as a grant again if you're in retail, hospitality or leisure. There's quite a good list on this on the Gov.uk website. We've got links to the list on our MailChimps and on our website that give you a full list of who applies to this. If your rateable value of the property is between 15,000 and 51,000, you receive 25,000 instead of 10,000. So if you've got a bigger property with a higher rateable value, you can get up to 25,000, but that only applies to retail, hospitality and leisure. The £10,000 one discussed previously applies to all businesses across the board. If you're a small retail, hospitality and leisure business, i.e. your rateable value of your property is less than 15,000, you still only get the 10,000. So it's not a 25,000 across the board for retail, hospitality and leisure. It's only for the bigger properties within that sector. There is, however, a very welcome extension, I think, from people I've been speaking to, in that next year's business rates for retail, hospitality, leisure and nurseries, being childcare nurseries, Ofsted, I think it's Ofsted governed nurseries, there's no business rates next year. There's a business rate holiday in totality. So in addition to the grant, there'll be no rates next year, but only for those particular sectors. That scheme, as I said, is run by the local authorities. I've seen one of these letters already from Stoke-on-Trent City Council. I've already seen one of these letters, so they are doing it, and they are doing it, relatively quickly. To be fair, it's only been 2 weeks since they've heard about that one, and letters are already coming out. It's really straightforward. They'll only pay via BACS. You just have to sign the form and scan it back to them. I don't know when the payments will be made, but they are certainly collating the information. Again, I'd use a little bit of care. The letter from the council that I've seen suggests that they know what sector you're in, they know how big the rateable value of the property is, which I'm sure they do, and they will assess what level of grant is appropriate for you. I'm sure they'll get it right, and I really do hope they would in that circumstance. But if it was me, I'd double check for myself and make sure that the grant I received was the grant I was expecting, instead of just, accepting what was received. The form is very straightforward. That one should be nice and easy. The money's already with the local authorities. The forms are going out. So hopefully that cash flow will be in weeks, not months. Some of this cash flow that we're talking about is in months. This should be hopefully in weeks, but we haven't heard that. There's no timescales given on the letter I've seen. that's the business rates paying businesses. If we move on to obtaining time to pay, this has been around for a long time, obtaining time to pay. It's not a new scheme. This is a scheme that's almost been completely overtaken by COVID-19. This is normally used when businesses are in distress and they put a payment plan in with HMRC. They seem to have changed all the numbers and taken over the team completely just for COVID-19 related queries. This can be used for any tax, corporation tax, PAYE, VAT, that you are going to struggle to pay because of cash flow. Corporation tax obviously could be due at the end of the month. PAYE could be due in a couple of weeks. VAT could be the VAT that was already due and you can't pay because of problems that you've had already. You can obtain time to pay. What happens is the revenue put in an agreed payment plan with you normally. It might include a payment holiday and then so many repayments on a schedule, or it might be a repayment holiday of a month, 2 months, 3 months, and then payment in full. It depends what you agree. They do try and tailor it to your circumstances, or they certainly did before. I think they were very, very busy doing this. The key point from a tax advisor on this one with experience of doing this is you need to phone the revenue directly. They want to speak to the taxpayer. They don't want to speak to the advisor. Even if the advice to obtain time to pay has come from an advisor, they don't want to speak to us. They want to speak directly to the taxpayer, and they ask quite probing questions as to why the cash flow situation's arisen and when you are going to come out of it. Now, at the minute, COVID-19 is the explanation in 99% of circumstances. So my understanding from speaking to people who've been going through this process is it's not that difficult anymore to obtain time to pay. It used to be difficult, and it used to involve quite a lengthy interview process. That doesn't seem to be the case anymore. So I would encourage you, if you have got cash flow issues, this is quite a nice way of, again, deferring tax. What you'll want to do is make sure that you've got all the information you need ready. They'll want to know exactly what the liability is. They'll almost certainly want that liability to have crystallised on their system. So you must have submitted the tax return, the RTI submission, or the VAT return. They like to see it there. They don't like to talk about liabilities that they can't see. You need to phone up with all the reference numbers. So if it's VAT, phone up with your VAT number. They might ask you to just confirm your identity, normally with the previous VAT return. So have your file out ready. With corporation tax, they'll want the company number. They'll want the corporation tax UTR. There's sometimes 3 digits in front of a company UTR. They're normally 687 in Staffordshire. And then there's 10 unique digits after the 687. It's those 10 digits that they want. For PAYE, there's normally a reference number, a PAYE reference number. Have a look on some of your RTI submissions. They are on there. It's normally 3 digits with a slash and then 6 or 7 alphanumeric digits. The 3 digits are normally 586 in Staffordshire, but not always, because it depends where your PAYE scheme was set up. Just get the references ready. It really helps to get you through the system quickly. I suspect if you want to do this, you need to set aside a morning. This phone line is normally open 8 o'clock in the morning till 8 o'clock at night. When I've done this in the past, I will only phone at 8 o'clock in the morning or after 6 o'clock at night. This phone line has always been busy, and I suspect is completely overwhelmed at the moment. The revenue have in the last 10 days or so shortened the hours on this phone line from 8 o'clock in the morning to 4 o'clock in the afternoon. I'm assuming they're struggling with staff, but it is going to be chaos on that phone line. So set a morning aside for it. Make sure you've got your reference number so you can do it in one go and you don't need to phone back. The numbers on the screen, that's a special COVID-19 related number. So everyone on there is dealing only with COVID-19. As I say, the experiences that we're hearing about in the last few weeks is this is quite straightforward, and lots of repayment holidays are being put in place. So that is good news. These time to pay arrangements historically always carried interest at the Revenue's official rate. The Revenue's official rate of interest was dropped a few days ago to 2.75%. So it's not a really punitive interest rate. So most people just accept that there's going to be a little bit of interest. You know, it's not at 8% statutory interest or anything like that. It's at 2.75%. They should go through that with you on the phone. I'm hoping that they will still, but the training might be a little bit lacking if they've got loads of staff on there. But I suspect they are still interest bearing. I've seen nothing to say that they've removed the interest burden on these particular arrangements. That's time to pay. If we come on to the last one I want to talk to you about directly, and then I'll try and do as many questions as I can in the time that we've got. I think that was the plan, was to get to the questions. There's lots of different circumstances. This one, the business interruption loans, I mentioned it earlier on. The Chancellor, this was the Chancellor's flagship policy at the start of all the support that he was putting out there. And when I suggested that self-employed people would have to wait to June, the Chancellor's answer was, yes, but there's the business interruption loan scheme that has got £330 billion worth of government guarantees available to it. This is an enormous scheme that should have really been the cornerstone of the government support. It is a loan, but the loan was interest-free for 6 months originally when it was first announced. They changed that to 12 months very quickly. So a 12-month interest-free loan offered by all the major banks. So you could go and have a talk to your normal relationship manager. You could use your normal bank. There was funding of up to £5 million available, and it applied to any business with a turnover of less than £45 million. Any business actually isn't quite right. There is some businesses that it doesn't apply to, mainly sort of public health type related businesses and financial services, those type of businesses. There is a list. Agriculture as well doesn't qualify for these, but the vast majority of sectors were covered. And with turnover less than £45 million, it covers the vast majority of businesses. The problem is, it's not going very well, this scheme. From our experience, we haven't got a single client yet who's been successful. And we've got a few clients who've tried. They've all been rejected, having gone through an awful lot of paperwork and an awful lot of hoop jumping. You know, the banks want to see business plans, they want to see accounts. And then the line that's been coming up is that you would qualify for alternative sources of funding. So you therefore do not qualify for our business interruption loan scheme. That's the line that some of the banks are putting out there, that we're hearing. That is, I've seen that today on the national news as well, that the banks are trying to direct people to their normal funding sources rather than this particular loan scheme. That's troublesome. The business secretary earlier in the week was imploring the banks to do more, urging the banks to do more to help with this scheme, to get these applications through. I know they were very proud about how many applications had been made in a short space of time, and the banks were dealing with them. If a lot of those are getting rejected, then this scheme isn't having a great deal of effect. On the news this morning is that the Chancellor is very concerned about this, and he is going to make another announcement about this scheme, potentially tomorrow, if not tomorrow, early next week. That's not, I haven't seen that from the Treasury, that was just on the news from sources, but there is certainly changes to be made to this scheme. It isn't going very well. Rejections are prevalent across all sectors. The banks are just saying that these businesses have got too much security, so they should just be securing a normal loan in the normal way. The problem with that is if you have a normal loan, it's not interest-free for 12 months. Capital repayment holidays are hard to obtain, so the cash flow advantage of the loan decreases enormously. And as I'm sure most of you are aware, if you've got a limited company, for example, quite often a bank will want personal security in addition to company security. So then we've got directors being forced to put their personal assets, their marital home, family homes, other assets on the line to obtain a loan, when there was a government-backed loan scheme that was introduced to try and help, you know, initially. It isn't working. It isn't working how the Chancellor and the Business Secretary seem to want it to work. There seems to be a little bit of grumbling about that. You know, the banks were obviously rescued only just over 10 years ago, and the Chancellor and the Business Secretary seem to want the banks to, you know, do their bit now and come and help out. So a difficult scheme to get at the moment. If it was me, I'd just watch that one for another 24 hours. And if an announcement's going to be imminent, I wouldn't go through a process with a bank unless you were absolutely desperate. See what the next 24 hours brings. See if they remove the restriction. The restriction that's currently in place is the banks have got to assess whether another loan would be more suitable. That's the restriction that's been talked about. So if that restriction was removed, it opens an awful lot more people up to this loan scheme. In theory, a good scheme, it's just not working in practice. So hopefully they can salvage that with some changes. To do that, you do need a business plan, and you will probably need accounts. We've been doing accounts for people who are trying to obtain these loans at great speed to try and assist them. So you have got to go through all the normal processes. The banks are taking their normal risk approach. People can go whole of market. You don't have to go with your bank. So, you know, go and see a broker, go and see your bank, take some financial advice on where can you get this loan from and who would be most appropriate for your circumstances. That's the loan scheme. I'm not going to go into the great depths of detail on that one because I suspect it is going to change. You know, they certainly want to change it to make it a little bit more useful to everyone who's out there at the moment. That is the main points that I wanted to go through. So a whistle-stop tour at great speed through the salient points of all the different support measures that have been put in place. Obviously excluding the employee/furloughing one, just because that is riddled with employment problems and contractual problems. Again, hopefully the Chamber are going to get a special webinar just on that point. If I pass back to Laura just temporarily, and then I'm happy to take as many questions as possible.
Wonderful. Thank you ever so much, Chris, for that today. Chris, do you want me to ask the questions and then you can just answer them?
Yeah, you can do, Laura, yeah.
Brilliant. So we've got Pete Boyce. Can you defer VAT on imports?
VAT on imports hasn't been mentioned specifically, but they did specifically mention that the VAT-MOS scheme wouldn't be covered. That gives me the inclination that everything else is covered, but that is only my inclination. When they talk about what definitely is covered, they talk about normal year VAT returns. I would think it would be covered because they've not said it won't be. But again, to go back to the start, these things have been introduced at such speed that would come up in consultation. We haven't had a consultation. I'm afraid I can't give you a definite answer. But there we are on that one. They haven't specifically said it won't, and they did go to the trouble of saying the VAT-MOS scheme won't. So hopefully that's good.
Okay. Josh Cooper says, on small business rate relief grant, would this apply for those in a co-working space agreement?
The small business rate relief grant, the letter that comes is addressed to the person who's the liable ratepayer. So that's who the council are trying to track down. Now, in almost all circumstances, that will be the tenant. It depends how your co-working space agreement is structured. But that's who the grant is being directed at by the local authority.
Okay, brilliant. Emily Shaw asks, is education providers included schools and colleges?
What part of it's that in?
If we just let Emily just go for, sorry, there's quite a lot of questions now, so just going to go through them. We'll wait for Emily to just clear up what she means by that, and we'll just go to the next question.
Yeah.
So Carl Croft says, would you recommend any good brokers who could recommend the best funding product for businesses?
Yeah, and we know plenty of whole of market people. We've got our own financial services company who can look at that as well. I'm sure there's plenty of chamber members as well who can do it. What I'll do on that one, Carl, is I'll send you a list over by email afterwards.
Brilliant. Simon Johnson, do you think there is going to be any on offer for directors of limited companies?
The rumblings are there. The Federation of Small Businesses are concerned about this one. I think people are right to be concerned in that the only thing that seems to be on offer is potential furloughing of a director, but that's troublesome because the director's got statutory duties in a company to run, a payroll to run, and all that sort of thing. So that's very limited. The Chancellor had a little dig when he spoke about self-employment, in that people who are self-employed didn't pay as much tax as employed individuals. I think the Chancellor would throw directors of limited companies into that grouping as well. I'm thinking here more the small limited companies, which I think is probably where the question's aimed. So I would think the chance we're probably not high up the Chancellor's list, but the rumblings are there in the background. It needs lobbying really from the trade bodies. That's where a lot of it came forward.
Okay, we've got Ian Warrilow. Are businesses that are in serviced offices eligible for the small business grant?
Again, that goes back to who the liable party is for the rates. That's who the grants are being directed at. So it depends on what sort of lease you've got on the offices.
So just Diane, just for you, and will the slides be available after we log off? Yes, they will be available, and also a copy of this webinar will be available on the Chamber website as well, as are all the previous webinars that we've done before now as well. Let's go down. Simon Johnson again, what will HRMC need evidence of for a limited company director to go furlough, but the company continues to trade, if you know the answer to that, Chris?
Yeah, again, this is one of the problems with furlough, which is why I think we need a specialist to come and look. If you've got a sole director and the company continues to trade, I think you've got massive problems, and I think the revenue won't like that at all. If you've got multiple directors and some of the directors are furloughed and some of the directors are retained to run the business, then potentially, who knows on that one, to be honest. This is why there's so many employment problems and Companies Act issues as well. Hopefully the next webinar by the Chamber, when we can get one up and running with someone who knows about the employment and the furloughing, can sort out those sort of queries. It's a minefield, Simon. We're all in the same problem on that one.
What I would say as well in reference to that is we are doing a drop-in clinic on Friday at 2 p.m. with Joe, who's our HR specialist at the Chamber. So if you have got any questions about furlough that Chris doesn't answer today, the chances are Joe will be able to answer those at Friday if you are free at 2 p.m. Because we had a lot of questions on furlough last week, so I am expecting quite high input on furlough again. Bear with me while I try and get through all these. I do apologise, there are quite a lot. Bear with me. Is there any rate relief if you work from home?
No, it'll only be business rates on that one, business premises. It'll be identified commercial premises. There's been nothing said on working from home. There's been nothing said across the board on tax relief that might be available for people working from home, as obviously the numbers have increased dramatically. Nothing has been said. Historically, it's very difficult to claim any sort of relief for working from home, apart from very trivial amounts. That's something that I think will get picked up in due course, that there needs to be some sort of more appropriate provision given the numbers now working from home for a sustained period of time.
Okay. So Tom Young says, Chris, thanks for this. Is the loan scheme the best way forward for owner to manage the business? I imagine you mean by that, owner to manage their business.
It's one way forward. As to whether it's the best way forward will depend on a whole host of questions. It's one way forward. It's one way of easing cash flow. It's one of the methods, in addition to all the other methods, hopefully, that we've talked about, deferring VAT, deferring tax. All of these methods are short cash flow enhancing methods. And that's all the Chancellor is trying to do effectively, is stop us all having to close the doors and make sure that, cash flow is still there and we can continue to operate. As to if it's the right method for you, who knows? There's too many questions, too many variables on that one. It's one of the methods. Okay.
Chris Darius says it may be worth mentioning that some councils, South Staffs is mine, are allowing people to apply for the 10 grand, 10k grant online as expect my letter to go to my office, which is now closed.
Yeah, no, that's a really good point. The problem with that is that they don't appear to have sorted out how they're going to do this, because the letter that I've seen, and it was Stoke City Council, the letter that I've seen implored people to return the form online. They didn't want the form posting back. They wanted you to fill the form in, scan it, and send it back online. But all of their letters are coming out in hard copy. If you can't get the form, I don't know how you're going to do it, because you've got to fill in a form, you have to sign, you have to put various details on to say that the property is occupied, that you're the right person to be claiming this grant. You have to sign that you've not benefited from all the state aid type de minimis levels as well. So you do need the actual form to do it, I would think, certainly in Stoke. Hopefully the councils will start getting that to us electronically, but I don't know if they possess, email addresses and things for everybody. I doubt it.
Okay. Mark Hawkins says, is an LLP considered a limited company or a partnership?
We haven't had the specific answer on that. The normal overriding principle in taxation is that an LLP is taxed as a partnership, not a limited company. So it's taxed as a partnership, but it benefits from limited liability like a company. But in taxation terms, it's taxed in exactly the same way as a partnership. So gut instinct, partnership, because that's what it normally is. But they've not said for definite. That's just me basing it on how all the other taxes interact. And if you've got an LLP, you are treated as a partnership for pretty much everything. There's some additional rules, but it's normally you're taxed as a partnership. So I would think you were as a partnership, but we've not had that confirmed.
Okay, Jill Knight says, as the only other scheme for the self-employed is universal credit, do you have any info on how, when this could come our way? I have applied and I've been confirmed identity. Now it says I need an interview. The phone line is constantly engaged and text messages won't send. Who, when or where is going to interview us? And if we have no interview by the 30th of April, you have to start the claim again.
Yeah, we're aware of this as well, but then I saw the numbers the other day that nearly 1 million people have applied, so I'm not at all surprised. Yeah, I don't know any more than you, I'm afraid, on that one at the minute. There is enormous delays in it, and the system is completely overwhelmed. It was very harsh of the Chancellor to make that suggestion that the only support available was universal credit, but there we go. That is what he went for. I can't add anything to that one, I'm afraid, but I am aware that you're not alone. We've got lots of people in delays on that one.
So earlier, Emily said, is education providers included schools and colleges? And then she's just put with getting help with funding grants, as nurseries have been mentioned, but there has been no guidance for schools or colleges.
Yeah, I haven't got anything further on that one, I'm afraid, either. The only term they ever use is nurseries. They use Ofsted registered nurseries. They don't do schools. They haven't said anything about that. The loan scheme won't apply to a school because that's on the list that doesn't, one of the sectors that doesn't apply. As for some of the other bits and bobs, it's only nurseries that they keep talking about, not schools.
Bear with me. I'll just look at the other questions. So there are a couple of furlough questions here. I'm going to pass them over to you, Chris, but if you can't answer them again, I will just pass everybody over to our clinic on Friday at 2 p.m. I have an employee that's furloughing, but she's been asked to go back and work for the NHS on the front line. Can I still furlough her without complications? That might not be.
Yeah, that's one of the major problems with this scheme. There was a line put in where the minimum period needed to be 3 weeks. I don't really know where it came from, but it was certainly there that you had to do it for 3 weeks. If she's employed elsewhere, she's probably employed elsewhere and your contractual terms don't impact that. But I would seek advice. What we're saying to all, we're deliberately not answering questions on this because there's so many contractual problems. We're talking to our clients about the benefits of it and the potential impact that it might have. And then we're getting an employment law specialist on to make sure that your contractual terms and your terms of business are okay and it works and that we're getting the appropriate documentation. The Revenue have said that they'll come and audit this. So you've got to get your paperwork in audit. And that's why we're making sure that we're getting employment advisors on board as well.
Brilliant. Okay, so Stephanie Freeman says, if someone gets refused on the business interruption loan, do you think after the Chancellor's new announcement tomorrow, businesses will have the opportunity to reapply?
Yeah, I would think so. There's lots of providers of this. Obviously, I mentioned the high street banks, which is sort of the flagship that all the high street banks are on. There is dozens of providers on board. So being turned down by one, I don't think that would stop you applying to another. As to if you'll be able to apply, say Lloyd's turns you down, would you be able to reapply to Lloyd's? I don't know. But there is lots of providers. I've seen a list and it goes on and on and on. So yeah, I would think so, but maybe not with the same provider.
Okay, brilliant. So So Diane Roberts just letting us know, had to step away for a moment, but NULBC have the SBGF application online and have responded, even though they haven't seen a printed letter. So
yes,
that
that's
might just
really
be one
encouraging.
for...
So obviously Newcastle Borough Council have got theirs online to do the small business grant. So that's great news. Hopefully other councils are doing that as well. Stoke, I haven't seen anything from Stoke online, but that's great news if Newcastle got organised to do that.
Brilliant. And just again, in reference to furlough, we will have Joe on Friday at the clinic. But again, we do have our Quest helpline that's on the Chamber's website. So anybody talking about furlough and wants questions answered about that, they can be directed via the Quest helpline, which has been quite useful for a lot of our Chamber members.
Wonderful. There's a few other people just coming in on this small business rates relief. That Staffordshire Borough Council is also online, and South staff have already replied and say they're going to start processing payments next week. So that really is wonderful. Hopefully this is going to be the first wave of actual physical cash support. That I think that's the intention. Certainly the business secretary was very proud that the money was already with the local authorities to start distributing. And if the councils are managing to do it quickly, then that really is good news.
Bear with me just 1 second. Just going to check the chat, just make sure we've covered everything. Has anybody else got any questions? We've got 1 minute left. So if anybody does have any more questions, I'll just give you a couple of seconds. Okay. No, just people saying thank you for today, Chris. Thank you everybody for attending today. We had 95 people attend today, so really, really good. So everybody, if you do want a copy of the presentation today, you can find that tomorrow on our webinar library on the Chamber website, so you can find that there. As I said, we will be running pretty much every day a webinar of some description at about 2 p.m, so please look out for that on our Chamber website and via your emails as well. But we just want to thank Chris for today and look forward to seeing you all very soon.
Thank you very much, everyone.
Bye.